Good afternoon, this is Dan Haugh, PTI Securities and Futures, coming to you on Tuesday, December 27th for your daily afternoon wrap-up. The S&Ps didn't do anything overnight because of the holiday. Asian markets were down a little bit, Europe markets were mixed. Going in today, there was a little bit of fundamental news there. The Case-Schiller index came in worse than expected. Housing prices continuing to slip. Granted, the negative numbers are getting a little bit smaller, but they're continuing to go down. The consumer confidence was a little bit better, however. They were expecting 60, came in 64 something. So that part was actually pretty good. We did have two Fed indexes come out today, the Richmond Fed and the Dallas Fed. Both of those were a little bit better than expected, but they still were very bad numbers. One of them still being negative, the other was very, very slightly positive. So once again, a continuing slight improvement is really all we can say about that. The only earning news of today was all about chicken feed. Calmine Eggs came in, they actually did much better than expected, and a little bit of that was due to the fact that the price of corn had dropped during the quarter, and also that the price of eggs are firming. So you and I get to pay more for food, even though the chickens get to eat for cheaper. Actually though, today the strongest complex was the grain market. There's weather problems in South America due to the drought, so corn, soybeans, and wheat were all up strong here today. Soybeans leading the way, so next quarter there might be a little bit more of a problem. The day today was actually a very, very boring day. Lowest volume of the year, which is saying a lot because I think we said that Friday also. Italy has a 10-year note, very, very close to that psychological 7% yield. So close, in fact, it's 6.998 at the close of today. So we're watching that very closely for the rest of the week to see if that actually goes above 7%, because that could actually call into question some of the recent moves of the ECB that were supposedly heralded last week. During the course of the day here, the indexes closed a little bit mixed. The SPX closed up less than a quarter of a point at 1265. The Dow closed down 1 at 12,292. NASDAQ closed up 6, so that was the mix. The 10-year note actually is closed at exactly 2% on the yield. That being above 2% and the 30-year being above 3 was actually considered a positive, but they're not getting too far away from that. Dollar was a little weak today. It was down 10 cents. The dollar index closed at 79.81. Oil was one of the big stories of today, big mover. Closed well above, closed to 101.50, up $1.69 here today. Basically, there was two things. Obviously, the consumer confidence helped. They're thinking that potential more driving exposure from the U.S., but also a little saber rattling on the Gulf of Hormuz by the Iranians. So realistically, oil was the strongest of the day here. And at some point, an increasing oil is going to have to get in the way of the continuing rise in the S&P, but it doesn't look like that's happening anytime soon. Very weak calendar going forward. There's really nothing of note the rest of the week. So probably continued slow volume for the rest of the week. This is Dan Haugh, PTI Securities and Futures.